Hi everyone, my name's Abul and welcome back to CRTV, powered by City Realtor. Before we start, please don't forget to hit that like button as it really helps the channel. In this video, I'm going to discuss why you should be paying your taxes. I come across many self-employed people who earn money in cash, many of whom are very successful in their fields, be it builders, gardeners, or makeup artists. You might be surprised to know, in a good wedding season, a makeup artist can probably make up to £5,000 a day, which is definitely not a bad day's work for anyone's standard. But let's say you even make £1,000 a day, and you work every working day of the year, you would have racked up a whopping £261,000, enough to buy a nice little flat just outside on the outskirts of London. However, this cash means nothing when you're buying property, unless you've declared it and paid your taxes. Secondly, when it comes time to buy your flat or house, you will have to explain where your money came from. And it might be hard to explain to your solicitor why you have £261,000 stashed away under your mattress in old 20s and £50 notes. If you are getting a mortgage, your lender will definitely want to know how you accumulated this small fortune. They will also want to know that you will be able to pay your monthly mortgage payments going forward. With your monthly takings, you should have no problems paying that mortgage. However, it needs to be on the books to prove that you can pay it. That means either through payroll, dividends, benefits in kind, or a mix of all of them. There's a misconception that if you're a higher rate taxpayer, that you would pay 40% of your entire income in tax. It doesn't quite work like that. There's a picture that went viral online a little while ago, which describes the UK income tax system quite well. You can see the diagram here, but of course, each person is different, and do your own research and speak to an accountant, as the example used here is for someone who is on a £100,000 salary. And for yourself, it might be better to be self-employed or have a limited company or an LLP. But regardless, this is still a very good visual for many. So how much do you actually need to be earning, and how much deposit do you need to buy a property? Let's break down a £500,000 property for this example. If you were to buy this property to live in, and you weren't looking to buy it all in cash, then you would need a deposit and the rest would be borrowed from a mortgage lender. So let's just say you were to put down 15% as a deposit, which is £75,000. You would need to borrow £425,000. And to borrow that much, you would need to be earning roughly a fifth of that annually. Typically, a rule of thumb is that your lender should let you borrow 4 to 5 times your annual salary. So in this example, your annual salary would need to be somewhere between £85,000 and £106,250 per annum. Therefore, if you are a high-paid, self-employed person, you need to be showing at least this much in earnings to buy a £500,000 property. To buy a rental property, it doesn't quite work the same way. It is favourable to have at least a £25,000 salary. However, you still need to prove where your deposit came from. And generally, lenders will ask for a minimum of 25% deposit. And lenders aren't the only ones checking. Even if you were to buy a property all in cash, your solicitor will have to do their due diligence, and you will have to prove how you amassed such a small fortune. However, if you then become a professional landlord, then you may not even need a £25,000 salary, as you may be able to demonstrate that you are able to buy properties and rent out successfully. Anyway, before I digress and go off on a different tangent, get yourself a good mortgage broker who can advise you regarding the best products and rates on the market. Ultimately, nobody likes paying their taxes. Who wouldn't like to keep all the money that they've earned? But if you are looking to buy a property, then I would advise that you get yourself a good accountant and start paying your taxes. A good accountant will always find smart legal ways to pay as little tax as possible while earning the most. So, to all my self-employed viewers out there, if you are looking to buy a house or an investment property, get yourself a good accountant and pay your damn taxes. And start soon, because if you are self-employed, lenders may ask for up to 3 years' accounts. And that brings us to the end of the video. If you are looking to buy a property and would like our advice, don't hesitate to contact us. I'll leave my details in the description below. I'll see you in the next video.